Welcome back, humble traders. Today I'll be doing a technical breakdown on Meituan, ticker symbol 3690. If you are new to the channel, remember to take a second to give the video a like and subscribe for more charting and price manipulations. Do note that I'm just humble chartist and I do not provide any buy or sell calls. Instead, I focus on the potential traps laid out by the market makers. Always remember the stock market is never obvious. It is designed to fool most of the people most of the time. So without further ado, let's take a look at Meituan. Currently, it's down. The whole Hong Kong index is down as well. If you were to see that in my last video, I was talking about whether or not we had a double bottom. So we actually failed to get a double bottom here. This low actually broke through with quite a huge volume. So it wasn't a very good sign. So thereafter, it kind of collapsed down. I was looking at 150 as a support, but apparently it did not hold any, 150 did not hold at all. And we also did not even see a rebound. Even if we did rebound, the 180 previous support will become resistance as well. So currently, my support is still at 100. The psychological support at 100 will be very, very strong. And now we are trading about 118, 119 levels. The market is still open, just about 1 to 2 hours in. You can see that at this, there's a resistance here and there's also a support here. So current prices at about 116, 115 would tend to be generally quite there'll be some supports there. But I don't think this is the stock is looking too good because sellers are totally in control. Let's take a look at the volumes of the selling. You can, if you look at the selling pressure, you can see that there is a significant number of red candles here, and that is not really a good sign, or it means that institutions are selling very heavy, probably even dumping. So I wouldn't advise people to come in, even if the prices were to rebound. There wouldn't be any reversal so soon because big players will need time to accumulate. If it were to rebound quickly, then highly likely all these previous supports here at about 160, all these previous supports here at 180, they will definitely turn to resistance. So what will happen is that even if you rebound at 116 levels, we'll go back to these 160 levels and then come back down to 100 levels. Unless you are a trader, I wouldn't recommend you to come in to actually try to niche your way through and try to trade through, because in this market, it's very volatile and it's also the sellers are still very, very big. So in the event that $100 were to really break down, I'm actually looking at this March 2020 low at around $70. So there's still a very huge gap between 100 to 70, which is quite a concern. 100 to 70 is still is a $30 drop, and at current prices is about $50 away. If you look at the MACD, it's really pointing downwards. It's not a good sign at all. Looking at the weekly charts, the weekly chart is also very ugly. If you look at the MACD, there's no potential reversal so soon. The histogram are all red. MACD pointing downwards. Blue line is still way below the orange line. So long as the blue line does not cut above the orange line, then potentially it's not a buy. So yep, and if there's any changes, I'll give you guys an update. Thanks for stopping by. And don't forget to subscribe as you'll keep the uptrend of channel intact. Leave in the comment section below on your thoughts on this particular stock, or if you have any other stock tea requests. Till we meet again, appreciate the manipulation.